Doordash reported earnings after the market closed on Tuesday, and the market's pretty happy with the results. Shares are up about 4% in trading late in the day on Wednesday. I guess this is after hours on Wednesday. One of the things that's so interesting to me with Doordash is this is an $83.5 billion company. Now, I own shares of Lyft. Lyft is about a $6 billion company. Doordash is closer in size and market cap to Uber than it is to Lyft. So why is that? I think it's worth going through the results. That's what I'm going to dig through today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the financial results. And just at a very high level, total orders increased 19%, 5 million. This is a little bit higher than we saw with Lyft, a little bit lower than we saw with Uber. So kind of following the same trends. Gross order volume, $21.3 billion, up 21%. So a little bit higher. That order volume is going up. And their revenue, this is just going to be the portion that they actually keep, $2.9 billion, up 25% from a year ago. So again, we're seeing a little bit increase in their take rate. Probably not surprising if you've ordered anything on DoorDash recently. They also did report a solid gross profit margin, 6.4% as a percentage of GOV. That is up from 5.8%. So again, gross profit moving in the right direction. You're getting a little bit of operating leverage in the business. Contribution profit also increased from 3.9% to 4.5%. Here's where you see the steady increase in the bottom line as well. GAAP net income goes from a loss of $154 million to a profit of $141 million. When companies make that transition from losses to profits, that's really when you see the stock usually start to improve. And that's exactly what we're seeing with DoorDash. And sometimes it's these non-financial metrics that are really the most important that you need to look at. So selection and breadth of categories we offer help drive more monthly active users, now at an all-time high of 42 million, up from 37 million in December 2023. This is where things like their subscription, which is going to keep you on their platform, is really going to be an advantage. DoorDash has a ton of competition in the delivery space, not only from companies like Uber, but also individual companies that have their own apps where you can go order from them directly. Here's the question. Here's always the challenge with a business like this is, does the market aggregate to move to an aggregator like you have with DoorDash, or is it going to be much more bifurcated and segmented among hundreds of different apps potentially if you're ordering through an individual app with each restaurant that you're going to? It certainly looks like the market is starting to move towards an aggregator like DoorDash. That's helping improve their volumes, their operating leverage. Haven't really gotten to a ton of profitability in the business, but we're at least moving in the right direction. Financial outlook, they did say that for this current quarter, they're seeing $22.6 billion to $23 billion worth of marketplace volume, and then adjusted EBITDA $550 million to $600 million. And then that adjusted EBITDA, they're expecting to increase as a percentage of marketplace GOV from Q1 to Q2, and again from Q2 to Q3. So looking out 3 quarters, they're expecting to see those margins continue to improve. So again, going back to the company's valuation, I do think it's a little bit stretched. Given the current market cap, we have a price to enterprise value to sales multiple of about 7. And even on a forward basis, price to earnings multiple is about 44. So not a ton of value in DoorDash stock, but obviously the market is seeing this as a company that's very well positioned and is willing to pay up for it. The question to me is really, is that upside ultimately worth paying this premium?
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
One of the other things that's interesting right now is you're seeing Lyft and Uber talk more and more about autonomy. That did come up on the conference call, but it's kind of something that DoorDash kind of had to push off. Basically said that the last 10-foot problem is much more of a problem for DoorDash. And that makes a lot of sense. Yes, you can transport food from one place to another, or drinks, or whatever it is you're ordering, but how do you get it to the vehicle? And then how do you get it to somebody's front door? That's really the problem on both ends. And that's something that they're going to have to answer. So it's going to be interesting to see. It's probably going to be something where we're going to see competitors like Lyft and Uber move into that market a little bit quicker because they're actually transporting people. Now, does that give them ultimately an advantage when it comes to taking that next step? If you already have autonomous vehicles on the road, you already have that supply on the road, does that allow you to innovate in adding vehicles or adding features to those vehicles that, can maybe keep some food warm, And yes, you do have to go out to the curb to pick up your pizza or whatever it is you ordered, but it's right there coming from an autonomous vehicle. You don't necessarily have to tip them or do all the things you do with a regular person. Depending on where you are in the world, that could potentially be a compelling option. So it could be a way that those companies could get into autonomy first and expand their market, land and expand, if you will, and actually keep DoorDash out. So that's one of the things that I'm going to be watching is how do they handle that? Because you do have things like Serve Robotics, which are moving into delivery vehicles, delivery robots, but those are going to be much more for urban environments. You have DoorDash with a partnership with Lyft, but that's typically moving in the other direction. That was to give Lyft a little bit more reach with their business. So autonomy is going to be a question for DoorDash in the future, and one that they're going to have to figure out an answer to. That last 10-foot problem on both the supply side and the demand side is going to be a real challenge, but maybe something where they can lean on all of the companies who are innovating in this space. Absolutely something to watch. Now, this is not a stock that I'm going to buy at the current price. Again, just to go through those details, enterprise value to sales is 7. Price to earnings on a trailing basis is almost 700. So not a lot of earnings there to speak of. Enterprise value to sales on a forward basis is 5.7, 44.2 from a price to earnings. Now you compare that to Lyft, and this is a company that I have been buying recently. Enterprise value to sales is 0.9. Forward enterprise value to sales is 0.8. So much, much cheaper on an enterprise value to sales. And then even price to earnings. Not a lot of earnings in the past, so that's another high number. But on a forward basis, Lyft's price to earnings multiple is just 13.4. So the valuation is much more compelling. Now the question is DoorDash's market just that much better than Lyft's is? Are they in that much of a better position? I don't really know that that's the case, because if you're going to play one of these big players in the market that does have exposure to food delivery, I think Uber is a much better bet. So those are the two companies that I own right now in ride sharing in this sort of delivery space is Uber and Lyft. I think Uber is obviously the behemoth in the industry. Lyft, the company that could potentially be an upstart, really good valuation. They're even buying back $500 million worth of stock. And they have a bunch of partnerships in autonomy that are really compelling, could bring much more supply onto the market much quicker than some of their competitors, at least relative to their size. DoorDash, much more expensive, no real answer in autonomy. So that's one, it's going to keep me out of the stock for now, but definitely keep an eye on it as an interesting competitor in food delivery and all the other products that they have moved into in the past. But let me know what you think of DoorDash's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.